The Average Directional Index, ADX. The Average Directional Index, ADX, measures trend strength and ranges from 0 to 100, with readings above 25 indicating a strong trend. ADX is non-directional, so it indicates trend strength without clarifying whether prices are moving up or down. Combining ADX with DMI lines, plus DMI, and negative DMI can enhance trend direction analysis and help identify entry and exit points. ADX is less effective in range-bound markets and does not predict future price movements. Using ADX alongside other indicators improves the reliability of trading decisions. The Average Directional Index, ADX, is a vital tool for traders, used to measure the strength of a financial market trend, whether in stocks, exchange-traded funds, ETFs, or futures. The ADX helps traders reduce risk and maximize profit opportunities by aligning trades with the strongest trends. In this video, we show you how to interpret ADX readings and how to use it alongside other indicators like the DMI. You'll also learn strategies to apply the index to enhance your trading performance and discover how an ADX reading above 25 signals a strong trend, making it a crucial metric for any trend-following strategy. Understanding the ADX Trend Strength Indicator. ADX is plotted as a single line with values ranging from 0 to 100. It is non-directional, meaning it registers trend strength, not whether price is trending up or down. The indicator is usually plotted in the same window as the two directional movement indicator lines from which ADX is derived, shown below. When the plus DMI is above the negative DMI, prices are moving up, and ADX measures the strength of the uptrend. When the negative DMI is above the plus DMI, prices are moving down, and ADX measures the strength of the downtrend. The chart above shows an uptrend changing to a downtrend. Notice how ADX rose during the uptrend when plus DMI was above negative DMI. When price reversed, the negative DMI crossed above the plus DMI, and ADX fell as the uptrend died, then eventually rose again as the downtrend gained momentum. Table of contents of the Average Directional Index, ADX. 1. Understanding the ADX Trend Strength Indicator. 2. Steps to calculate the ADX. 3. Practical applications of the ADX indicator. 4. Analyzing trend momentum with ADX. 5. Strategic insights for using ADX in trading. 6. Identifying range-bound markets with ADX. 7. Real-world example of trading with the ADX. 8. The bottom line. Steps to calculate the ADX. The ADX is calculated as follows. Step 1. Calculate the directional movement. Directional movement is broken down into two directions, upward and downward. If both plus DM and minus DM are positive for the same period, only the larger value is used, while the indicator with the smaller value is set to 0. Step 2. Calculate the true range. The true range is used to normalize directional movements. It takes into account price gaps and daily volatility. The true range is the largest of the following values for a given period. Step 3. Calculate the smoothed directional movement indicators represents the percentage strength of the upward movement. The default period is 14. In this case, the average true range, or ATR, is the moving average of the true range values over the same 14-period window. Step 4. Calculate the directional index, DX. The directional index, DX, quantifies the absolute difference between plus DI and minus DI relative to their sum. This value provides an understanding of how separated the two directional indicators are. Step 5. Calculate the Average Directional Index, ADX. Lastly, the Average Directional Index, ADX, is obtained by smoothing the DX values over a defined period. This is usually done using a Wilder moving average. The first ADX value is the average of the first n DX values, where n is the number of periods. This smoothing makes the ADX line less volatile and more useful for gauging the trend. Practical applications of the ADX indicator. Traders use the ADX to assess the strength of a trend. The ADX also helps determine whether the market is trending or range-bound. Generally, ADX values below 20 indicate a non-trending or sideways market, suggesting that range-bound strategies are more effective. However, as ADX moves between 20 and 25, it signals a possible trend formation, and traders should watch for further confirmation. When the ADX rises above 25, it confirms a strong trend, making trend-following strategies like moving average crossovers more viable. Once ADX climbs above 50, the trend is very strong, but at these levels, traders should exercise caution as the market may be overheated and corrections may be more likely. The ADX is most useful when paired with the plus DI and minus DI lines, which indicate the direction of the trend. For example, if plus DI crosses above minus DI and ADX is above 20, it suggests an uptrend is forming and is an ideal time to consider a long position. Conversely, if minus DI crosses above plus DI with ADX rising above 25, a strong downtrend is forming. Analyzing trend momentum with ADX. Momentum is the velocity of price changes. ADX clearly indicates when the trend is gaining or losing momentum. A series of ADX peaks is a visual representation of overall trend momentum. Increasingly higher ADX peaks mean trend momentum is increasing. Increasingly lower ADX peaks mean trend momentum is decreasing. Any ADX peak above 25 is considered to still be registering a strong trend, even if it is a lower peak. In an uptrend, price can still rise on decreasing ADX momentum because overhead supply is eaten up as the trend progresses, shown below. Knowing when trend momentum is increasing gives a trader the confidence to let profits run instead of exiting before the trend is ended. However, a series of lower ADX peaks is a warning to watch prices and manage risk. The ADX can also show momentum divergence. When price makes a higher high and ADX makes a lower high, there is negative divergence or non-confirmation. In general, divergence is not a signal of a reversal, but rather a warning that trend momentum is changing. It may be appropriate to tighten the stop loss or take partial profits. Anytime the trend changes character, it is time to assess and/or manage risk. Divergence can lead to trend continuation, consolidation, correction, or reversal. Below. Strategic insights for using ADX in trading. Price is the single most important signal on a chart. Read price first, and then read the ADX in the context of what price is doing. When any indicator is used, it should add something that price alone cannot easily tell us. ADX tells traders about the strength of the trend, whether to help them avoid false breakouts or enter strong ones. Leveraging ADX and crossover signals. The ADX is useful in confirming crossovers of the plus DI and minus DI lines. For example, if the plus DI crosses above the minus DI, indicating upward movement, an ADX reading above 25 could be used to confirm a strong trend and therefore entry into a long position. Likewise, if the minus DI crossed above the plus DI, an ADX reading above 25 can confirm a short entry. Note that some traders use an ADX reading of 20 to confirm a trade entry on a crossover of the plus DI and minus DI lines. This can mean entering trades earlier, but can also result in more false signals. It's up to each individual trader to determine what best suits them. Utilizing ADX for confirming breakouts. The best trends rise out of periods of price consolidation. Breakouts are not hard to spot, but they often fail and end up being a trap. But the ADX can help confirm a breakout. When it rises from below 20 to above 25, for example, a strong trend has been established and is likely to be sustained. On the other hand, if the ADX remains below 25, it likely indicates a false breakout, and if it remains below 20, it's even more likely to be a false breakout. Traders can also use the ADX to monitor the continuation of trends, with a rising ADX possibly signaling that it's time to add to a position or adjust stops higher. During periods of consolidation, a low ADX shows that the market is resting, but as the ADX begins to rise, it can signal an impending breakout. But it's important to beware a rising ADX below 20. While it indicates that price movement is gathering strength, it hasn't confirmed a trend. Moreover, for added reliability, a rising ADX with increased volume provides strong evidence of a proper breakout with momentum. By strategically using ADX during breakouts, traders can boost confidence in their setups, manage risks effectively, and focus on high-probability trades. Identifying range-bound markets with ADX. It is often hard to pinpoint when price moves from trending to range-bound. The ADX shows when the trend has weakened so much that at the very least, the trend is over and price is likely entering a period of consolidation. Range conditions exist when the ADX drops below 20 and stays there for an extended time. In a trading range, price basically moves sideways, requiring different strategies than trending markets do. After using the ADX to identify a consolidation period, choose the appropriate trading strategy. In trending conditions, entries are made on pullbacks and taken in the direction of the trend. In range conditions, trend trading strategies are not appropriate. However, trades can be made on reversals at levels of support, go long, and short. Advantages of ADX. Measures trend strength, helps avoid false signals, adaptable to different markets and timeframes, indicates trend continuation or exhaustion, pairs well with other indicators. Disadvantages. Lagging indicator, limited predictive capability, not effective in choppy markets, can give false signals in range-bound markets. Real-world example of trading with the ADX. A gold trader is trading on a 1-hour candlestick chart and observed the metal consolidating, with the ADX declining and the gold prices oscillating between 25.80 and 25.30. The market shows no clear trend during this phase, indicating that momentum is weak. The trader then receives a potential buy signal when a positive DMI crossover occurs, accompanied by a rising ADX, a clear indication that trend strength is starting to pick up. This signal is confirmed when gold closes above the 2577.45 resistance level, prompting the trader to enter a long position. Following the breakout, gold's momentum builds sharply, as evidenced by the ADX rising from 29 to 65. The DMI continues to show a positive crossover, reinforcing the strength of the uptrend. Confident in the direction and strength of the trend, the trader chooses to hold the position. Thereafter, the metal begins to consolidate between 26.20 and 26.40, and the ADX starts declining from its highs, indicating weakening trend strength and even showing some negative divergence. Recognizing that momentum may be waning, the trader prudently decides to exit the trade at 26.50, locking in gains before any pullback.